Today, we welcome Stanley Tsai, who's the Fitch Director for Asia-Pac Insurance Rating, and he joins us this morning on Morning Call. Stanley, some pretty staggering numbers are coming from China Life.
Yeah, well, those numbers are based on PRC GAAP.
And that's an accounting standard change for the insurance industry
yeah,
in China.
so what's been happening is that at the end of December, the Ministry of Finance issued a new regulation basically saying that the Hong Kong FRS, which the X-share investors are used to, and the PRC GAAP, which the A-share investors are used to, have to converge. And as a result, for the PRC GAAP accounts, they have to raise the discount rate on the reserves from 2.5% to market interest rates. And that means that they'll be able to release a lot of their reserves, and that's going to be counted as profits and shareholders'
and boost their numbers
and
as
boost
well.
their numbers as
so
well.
So we're looking at a threefold increase in profit growth for 2009 for China
Life. Yeah, well, it's
Life.
basically partially coming from a release of prior year reserves as a result of the accounting change.
Okay, well, let's talk about 2010 then. 2010, maybe not as good a year as 2009, obviously, because you had that huge economic recovery and recovery really just for business worldwide. But 2010 should be pretty solid, you think?
Yeah, well, I think the sector is still going to be supported by a number of structural and cyclical factors. In terms of their product offerings, we expect that they'll continue to shift towards higher margin traditional savings and protection products from lower margin deposit type products. So that's going to help their, I guess, the present value of the future profits that they can expect from the new business that they're writing this year.
Yeah, and you're expecting most of these gains to come in the latter half of 2010.
Yeah,
is
well,
that right?
Once interest rates start to rise and bond yields start to rise, their interest margin is going to be supported by that.
Yeah, we were talking all morning long with Paul Gordon and Stephen Engel about inflation in China and how interest rates would likely have to move on the mainland. Does Fitch have a perspective on interest rates?
Well, our house view is that policy interest rates is going to start to rise in the second half of this year, continuing into next year. So that's going to lead to higher bond yields, and that's going to help the insurance companies' interest margin.
We should also note, though, with insurers in China, well, insurers really globally, a lot of their profit also comes from investment gains, of course. And you know, Ping An actually did better than China Life in the last few years with their aggressive investment strategy on the stock markets. That kind of backfired in 2008, late 2008, of course, with that financial crisis. But what about investment gains for 2010? Is that going to be muted as well?
Well, we remain very cautious about their exposure to the equity market. Let's say if they've got $10 of assets and $1 of capital, I think a 10 to 15% allocation to equities would probably be a conservative benchmark. And as of now, they've got on average 20 to 30% of the assets in cash and deposits, and about 10 to 15% in equities. And in terms of the investment restrictions, they still have about 10 to 15% room to grow their equity exposure. So, but at the current level, I think from a credit perspective, it's probably conservative.
Okay, let's take it from a credit perspective, because it's a different view, I guess, from the stock market perspective. But from Fitch and a solvency outlook, which is the best play in the life insurance market in China?
Well, China Life has always been the strongest in terms of their solvency. Their local solvency ratio is about 300%. For Ping An and the other listed companies, they've been managing their capital ratio between 200 to 250%. So from a purely solvency perspective, I guess China Life has always been the strongest. Yeah,
Stanley, let's try to squeeze this out, 20 seconds here, but people are always surprised when they hear about the penetration of insurance in China. It's not very high, is it?
It's not very high. It's about 2% of GDP compared to 10% here in Hong Kong. And in terms of total financial sector assets, insurance companies in China account for about 7%, compared to 17% in more developed markets.
So there's lots of growth
Tremendous
growth still in these companies. Thank you for that. Nice seeing you, Stanley.